I always answer back with, hold on a second. Is there a reason why you can afford a capital gain this year? Or is there a reason why you may want to show a short-term capital loss? And we let them dictate. So then I can say, okay, great. I can get you your money and I can make it look like you lost money to the IRS. Hey, welcome to our podcast, FinTips version. How are we doing today? I'm asking you today.
Oh, I'm doing great. Doing great. Well, I'm great. Others not so fortunate. So for anybody with the hurricane impacted, if you were listening. So
That's true. You look like you haven't showered. You've been in the floods.
hey, I was out riding. I mean, we had a lot of neighbors have some flooding, so issues there. But I know there are a lot of people probably struggling with that. So praying for you, thinking about you. So
hey, even as far as like Myrtle Beach, I looked last night. They got like severe storms and tornadoes and stuff.
Yeah,
that was not supposed to happen. It was supposed to kind of squeak back out into the ocean there. But
all unexpected stuff.
We are lucky here, and we are back to work, and no water made it into the office, so we're happy with that.
Yep.
Also, I will say, you want to check out our Jazz After Dark. It's a video that I do. Have a drink with me. Come hang out. Last night, we talked about exactly how diverse a portfolio should be, and then we proved it by showing our portfolio's returns.
How about that?
I did it, and I was very disclaimer guy, like this is actual returns, not hypothetical, and this is not indicative of every client's account. I was like, oh my God, we're going to get in so much trouble. Stuff, yeah. Oh, I had to do it. But if you want to check that out and learn something along the way, of course, I love teaching, and that's pretty much it there.
There you go.
We got financial word of the day here today. 2 financial truths and a lie. I think I'm going to get you on this one.
Oh, all right. Let's see.
Yeah. 4 investing tax strategies that you just got to know, baby.
Okay.
And,
joke of the day.
Maybe a joke or 2 in there.
Oh, dear.
I was hoping I could do like one joke and then go a little further. I want to do a simple joke and then go a little further and have you say like, no, that's fine. I want your approval to go something along those lines, or no, that's too far. So you'll tell me if I've gone too far today.
So maybe we're like adios, and we close out the show, and then we do that one, and then if it works,
no, we're gonna do the first one, and you're gonna say whether that's thumbs up or down, and then we're gonna do the next one.
Okay.
Because if it's no good, then we know and we won't do it.
Okay. Whatever you say.
All right. Financial word of the day. It's 2 words: asset utilization. The asset utilization rate, it's not the only, now you're going to hear this and think like, oh my God, I should be looking at this. It's not the only way to fundamentally analyze a company, but think about it is the revenue that a company makes off the stuff that they have, right? Typically used in production. So let's say the number you look up, usually with REITs, it's smaller. It would be like, 18% or something. But let's say you look it up and you're like 60%. So we're essentially what that's saying is we're making 60 cents for every $1 in assets that we have, meaning, we're being efficient, right? If you have, if you're making a penny for every dollar in assets you have, you're spending, like you're buying a bunch of assets. You probably have equipment that's not producing. And keep in mind, that's just one metric to use, by the way, there. They could have debt on their assets, so not the one-stop shop for everything, but if you compare like REITs or a group of those stocks together and you say, well, which one of them has the highest asset utilization, naturally their assets are real estate. So it would give you an idea of who's more efficient and maybe who is not.
There you go.
Separately from everything else.
Okay.
Yeah. I just thought I'd go that route.
Asset utilization. I like it.
Yeah.
I like it.
And truthfully what I did, I went in the financial glossary and I just went down A, and then I was like, oh, we haven't talked about that one before. Let's do that one.
There you go.
Love it. You ready?
2 truths and a lie. Let's go.
2 financial truths and a lie.
Okay.
So it's always important. All right. Number 1, I once spent $90 on a single cigar. Number 2, I have bought no less than a dozen wire testers. I'm a DIYer at home. The things you test throughout.
Yeah. Okay.
Because I lose them all the time.
Is that what they're called? Wire tester?
It's just a cheap one, but yeah. And number 3, my debit card was actually declined yesterday for a soda purchase across the street. It was about $1.49. 2 financial truths and a lie. 1 of those is a lie. 2 of those are true.
Well, number 1, the third one is a lie right this second. I got to clarify. Was it yesterday that you tried to purchase this?
I was, in fact, here yesterday.
Oh, you were here yesterday.
Yep.
Oh, okay. All right. I didn't come in yesterday. Okay. So hurricane, remember. All right. This one's tough.
That's a tough one. It's tough to admit if my card
$90 for the cigar. That's a lot of money.
if my card was declined, by the way, too. That's an embarrassing one to admit, but
Yeah, but those are sometimes just weird things. Like it could just be.
and I wrote down my debit card.
Yep.
That means cash.
Yeah, but I've had that happen.
You think I've bought no less than a dozen wire testers? That one's not sticking out to you? Okay. Which one is the lie?
Because I've had problems like that. Like I just like randomly have to go buy these nonsense things that you don't use all the time, but then when you need it, you're like, where is it again?
Gotcha, huh? I like this one. Yeah, it's making him think.
It's either cigar, but
lie.
honestly, I know your love of cigars, so I'm almost leaning towards that one's true, but it could be the lie. I'm gonna go with the debit card was declined.
As the lie?
No, wait, no, because that couldn't be it.
There's two.
It's the cigar. Cigar.
The cigar's the lie?
You didn't pay $90 for it.
My man, he knows it. I do like a good cigar, but $90? Are you
That's
stinking
outrageous.
kidding
I've
me?
never heard of that. So
No, and I study those people. So I'm like, when I look at a brand, I'm like, yeah, that was made by this guy or this guy or this factory. I'm like, I'm not paying that. I could just go buy this one and it's exactly the same. So no, I would not spend $90 on a cigar, but sadly that does mean I have bought no less than a dozen wire testers. I lose those little boogers all the time.
Yeah.
And my debit card, in fact, was declined yesterday for a $1.49 soda purchase. But remember, somebody bought, it's because the card shut off. Somebody bought
Fraud.
Ticketmaster, $500 worth of Ticketmaster tickets. That was not me.
Yep.
And I had it shut off. This was like 2 weeks ago, and I totally forgot, left the card in there.
That's where I was thinking, like something happened there. So I had a really embarrassing one time where financially, I mean, I've always been pretty smart keeping the money in the bank, not overdrafting like some people maybe had happened years ago. But and so I had a card, I think it was my debit card, and that's all that I had at the time. And I went out to eat. And I went with some friends, but there was a girl that was going on a date with me, and her sister came along as well. And, me being the gentleman on this scenario, I was just like, hey, I got her meal too.
what this
So
gets
I
me.
bought both meals.
Oh, okay.
And when I did it, the guy comes back and he's like,
Yeah, that's
excuse
so
me.
hard.
He was like, sir, your card was declined. And like, I'm like, what? There's no way this could happen. And it ended up being something, I don't know. It was just an issue with maybe the machine.
Run it again.
Something. But yeah, but ended up, whatever the case was, they ended up paying for the meal.
Who?
The girls.
Ah.
Because I didn't have the money. Like that was all that I had. I didn't have cash on me. And I'm like,
I'll never see them again.
yeah. And so they were really cool about it actually. And I don't know if I even paid them back for it. Because I probably bought them another meal sometime. But I don't know. Can't remember.
Like if I'm the waiter, you probably get used to it, but I wouldn't be able to say it. I would have to come to you and go, excuse me, the chef would like to mention something to you or something. I'd have to get you away from your people. I just couldn't do that in front of people.
Yeah, it's a tough one because I mean, thankfully, I knew I had money in the bank because I'm like, there's just no way this could happen. I do have money in the bank. I know that. Still in that moment, it was a little bit of a humbling experience because now I'd be like, nah, I'm not worried about it.
Yeah, as you get
We'll figure
older,
it out. I'm
you're
not really worried about this. My wife would be like, what? You do have money in the bank, right? Like,
My wife hates it when I do this, but every time we go somewhere, and even if it's like a nicer place, when it's time to pay, I'll like grab my card and go, see if that one goes through. And I always do that, and she can't stand that. Just you sound so like, I'm like, it's a joke. And,
Yeah.
Oh, she hates it.
Yep.
All right, 4 investing tax strategies you need to know. By the way, this is not the only 4. We tried to simplify it and make it something we could talk about there.
how many?
There are 4.
That's what I'm talking about.
I hope that didn't break the mic. That's the loudest I've ever talked.
Yeah, it is.
I would like to start with a simple one myself. I'm going to go with those of you that are W-2 employees. You get the shaft when it comes to having tax strategies, unfortunately. And so it's popular now, have a side hustle, do all this. So having a side hustle as a business instead of just doing whatever you do, that opens up so many doors to you. Number one, being able to use a SEP IRA or something like that. And being able to get actual like home office deductions, travel, supply deductions, things like that, that opens the door at least. So I'm going to go with owning a business to some degree if you're a W-2 employee.
I like the idea of that. I think people do have to realize if you're a W-2 employee, you have another business, you can only take losses for so long. Eventually the IRS is going to be like, okay,
Well,
this isn't a real business.
legitimate. That's what I'm saying.
So if you have income though, you could, potentially have extra income coming in and then basically say, well, hey, I can write off most of that income potentially. You use your cell phone for things and, chat with your CPA.
The guy that's making my phone go off here, actually, he has his brother he would make cornhole, the boards, whatever that is. And he was just doing it. And I'm like, well, why don't you make it like a little business and actually take the deductions and stuff? Because he had a normal job for the city. So that's the first idea. You got one you want to use?
I did a video the other day on it, donor advised funds. So donor advised funds are an option for people if they want to give to a charity, but they don't want to give right this second. And so it creates some opportunity. If you want to bulk, like basically fund your charitable donations, give a bunch at once. I had a client who said they were going to pile up 3 years worth of their charitable contributions, put into the fund, and then sporadically give it out. But that allows them to get over the standard deduction to be able to take more of a deduction on their taxes.
Yep. A big one there is if you have one of those high dividend paying ETFs, they are not paying you a dividend. They are reimbursing you the dollars you invested. So your cost basis is going down month after month after month. When your cost basis becomes zero, inevitably, take a piece of that. You can donate it to the donor advised fund. You can get the deduction for doing that, sell it inside the donor advised fund, of course, donate it. And so there's ways to work around that. That's one that I come across a lot.
There you go.
Well, an obvious one, I think, is tax loss harvesting. I see a bunch of mistakes here, though. Tax loss harvesting is not the idea of selling losses versus gainers. There's so much more to it. But remember, you have short-term capital gains and you have long-term capital gains. You've got to dissect them and take a look at how that works before you go doing anything crazy there and selling off positions you don't know. That's a big one. And 2022 was a great year for this because you got to rebalance your portfolio and make it look like you lost money, which you may have lost money, but you got a chance to readjust and everything and show the IRS a loss, hopefully. So think of that, tax loss harvesting.
And one that people make so many mistakes on with tax loss harvesting is the idea that they'll go buy 3 ETFs. And all they're going to get is the net return on those ETFs. Yep. So think through building it. How we do it at Jazz is we basically build the fund so you actually own the individual stocks. It allows for you to have some winners, have some losers, but ultimately, if you get like the same style return as an ETF, great, but you're actually having a lot more opportunity to tax loss harvest on that.
Oh yeah, and I have another, like every day I have a client that's like, I need to liquidate so much out of this account to buy a house, to, get engaged or whatever. And I always answer back with, hold on a second. Is there a reason why you can afford a capital gain this year? Or is there a reason why you may want to show a short-term capital loss? And we let them dictate. So then I can say, okay, great. I can get you your money and I can make it look like you lost money to the IRS. Hugely helpful.
Yep.
I'm going to throw one in there that I think is really important personally here, and that's called asset location. So not just buying whatever you want, but strategically buying what is what is most efficient inside an account. For example, back in the day, we would have not really active mutual funds, but we would have mutual funds that were kind of growth oriented, but they would pump the stocks in and out. They'd be buying and selling and buying and selling. Well, that'd be better in a tax-deferred account. That would suck in a taxable account, like a brokerage account, because that turnover causes you a tax bill, right? So things like that. What's another one?
Or your Roth account and having more of growth opportunity in a Roth.
Yeah.
And all that goes to really also your withdrawal strategy. So maybe in a retirement style strategy here, you want to think through your withdrawal strategy. Well, where are you pulling money from first, and what could make more sense to have maybe kind of that bucket 1, bucket 2, bucket 3, but really from a tax strategy standpoint. Big. If all of your growth high flyers in the Roth, that's something you want to touch last anyways. It grows tax-free, so you can bear a little volatility, don't touch it for a while, and allow that to compound, grow for you, and have some opportunity there.
Don't think this is just retirement accounts either. The HSA gets me every time. So in an HSA, number one, it's going to be one of the smaller of your accounts because it's limited, and we don't often fill that up first. We got our 401ks and Roths and stuff. But in an HSA, you have every tax advantage. So that account should be as aggressive as possible, as long as possible, of course, unless you have a medical expense that you need to pay for. But for most people, they're using that as a long-term growth account with no taxes.
Yeah.
Right? So big one there.
Big stuff.
All right, what else you got?
I got a joke for you.
Okay, I've got 2 jokes for you.
Oh dear. Okay. What do you want to do? One joke first, and then I do my joke, or are we just going to go with both of yours?
No, you
Okay.
had it.
All right. All right.
By all means, ladies first.
Oh, ladies first. Thank you, darling.
Yeah.
All right. So my wife's not pregnant, number one, but this question threw me off. So my daughter asked me, she's like, "Hey, Dad, is Mom having a baby on Monday?" And it threw me off. I'm like, "Why?" She's like, "Because you said it's Labor Day."
That's a good one and timely. All right, so I've got one for that your kids can watch. What did the one nut say to the other nut while he was chasing him? I'm a cashew.
I've seen that joke, and that's why I was trying to. There's not many of these dad jokes. Maybe I can't remember them.
Oh, yeah.
But there's not many that I like it. I like it.
Okay, so kids can watch that one. So that was okay? Thumbs up?
Yeah.
Okay.
Thumbs up. Okay. Adios. Just
No.
Oh, okay.
All right. So I'm just going to go a little step further.
A little more.
And you just tell me, what do they call Chinese billionaires? Cha-ching. He wants to laugh.
Okay. All right. I gotcha.
This good?
I gotcha. I mean, I get where that's coming from. Somebody, if they're
You don't like it?
the Asian descent, will get offended.
No, I'm gonna love it.
I mean, it's
You don't like it?
I think that
that was too far.
I'm not saying that was too far. I don't think it was a dirty joke. I think that it was. It's just that it's. People get offended with everything nowadays, I feel like
it's a joke. I'm just trying to learn.
I know. I agree. I know.
So that one was borderline for you, maybe?
I just think from our audience, maybe I don't. You guys let us know in the comments.
Yeah, tell me,
is it or is it
too
not?
much?
You let us know, because that's when I'm like, I get where it's going. I just one person's gonna be like, hey, that was offensive, and we're gonna be like, okay. So
my background is of course managing funds for Chinese individuals. I got to know hundreds of them, and they, although it's sometimes translation's not there, they get a kick out of a good joke when you're not picking on them, but when it kind of makes sense like that. I had all kinds of jokes back then, and they would be like, they actually like it. And I don't know, it's a different society. Of course.
Well, yeah, everybody gets offended now, so it's tough.
Americans do.
You're having fun. You're just having fun. Yeah.
Stinking Americans.
Yep.
I can say that because I'm an American.
All right. Well.
All right. So there you go.
So
what we got?
I like it.
The most important thing there is, so when you're investing, I think of it as a strategy that could help your taxes, right? So instead of just going, I put my $200 a month away, what's the added layer? What's something extra that you can do? There you go. You got some tax strategies that'll help you out as well. And we appreciate you watching.
And adios.
Adios.